Thanks for tuning in. This video will explain what is a split dollar critical illness policy, and more importantly, why every incorporated business owner who is insurable should have this policy as part of the bumper guard protection around them and their family. My name is John Moakler, and I'm the founder of Moakler Wealth Management. And for the best advice on how to protect you and your family, subscribe to my YouTube channel and hit the bell notification so you'll be notified when we launch a new video. Now, when we design critical illness policies for our clients, we design them as a guaranteed policy. And what I mean by that is either they're going to contract a critical illness and get the payout, or if they don't contract a critical illness, they can ask for 100% of their money back. And this feature is called return of premium. And Canada is one of the last countries in the world with this feature. Now, here in Canada, only 5% of Canadians actually have a critical illness policy in place. However, 85% of Canadians worry about contracting a critical illness, and 58% of Canadians have admitted that they would be in financial trouble if they came down with a critical illness. Now, how do we determine what is the appropriate coverage? Well, for the average male who contracts a critical illness, they're usually off work for about 12 months. And for the average female, it's somewhere between 12 and 18 months. So if we take the example where you're earning $200,000 after taxes in terms of income, we would multiply that by 1.5 to come up with the $300,000 worth of coverage. Now, in order to implement a split dollar critical illness policy, you must have a corporation and you must be insurable. A split dollar policy is a concept whereby the client or the insured and their corporation jointly own the policy together. And there's some unique advantages in terms of the design of this for shareholders of Canadian-controlled corporations. Leave a comment in the section below and let me know if you currently have a critical illness policy and what features you do have, or if you're interested in purchasing a critical illness policy. Also take a look at some of the other videos. I have one there for business owners about how to design a tax-free retirement income utilizing whole life inside the corporation. Now, with a split dollar critical illness policy, the pure portion of the premium is paid for by the corporation, and the feature associated with the return of premium is paid for by the shareholder. And so that would kick in case of death, expiry, or surrender. And so if you contracted a critical illness and lived for 30 days, then the money would be paid out on a tax-free basis. If, however, you did not contract a critical illness and the surrender clause kicked in, then as a shareholder, you can ask for 100% of the money back, both what the corporation paid and for what the shareholder paid. So this is a great way to get the coverage and pay for the portion of the coverage using corporate dollars, which are much more tax preferred dollars than paying for the entire premiums yourself. And when we design our policies, they also come with another feature called best doctors. And what that means is that should you contract a critical illness, you will have access to some of the best doctors in the world who will help you to determine your condition and put a treatment plan in place to get you back and over the critical illness. So how does a critical illness split dollar policy work? Well, if you contracted a critical illness, the benefit would be paid into the corporation on a tax-free basis, and then we would recommend opening up a health spending account in order to get the money out tax-free. If, however, as a shareholder, you do not contract a critical illness and the surrender time period expires, the 15 plus years, then you can decide to surrender the policy and ask for 100% of the money back, both what was personally paid and what was corporately paid. And so this, again, is a great way for getting money out of the corporation. So let's look at an example. Michael, age 40, takes out a $750,000 critical illness policy. The overall premium is around $33,000 per year. However, $18,000 will be paid for by his corporation and $15,000 will be paid for personally to deal with the expiry, death, or surrender. So if Mike was to contract a critical illness, the $750,000 would go into the corporation tax-free and again come out through a healthcare spending account. But if Mike does not contract a critical illness, after 15 plus years, he would be able to surrender the policy and both the premiums paid corporately and personally, and in this example, that's over $500,000, he could ask for all of that money back on a tax-free basis personally. At the start of this video, I said that we only design policies as guaranteed. So in that example with Mike, either Mike was going to get a critical illness and the $750,000 would be paid into the corporation tax-free, or if Mike did not contract a critical illness, he could ask for 100% of the money back tax-free. I can't design anything else more guaranteed than that. This channel allows me to share the passion where it comes to financial planning, and so I'll only put out videos that I would also like to watch. And so I'll always put 110% effort behind every video. If you'd like to get more information on split dollar critical illness and how you can incorporate this into your own personal financial plan, click on the link below to apply to become my client. And if you like this video, give it a thumbs up, subscribe to my channel, and share the video with a friend. Thanks for watching, and just remember, when we design plans for our clients, we always make sure that your money outlives you in retirement.